There are not a lot of people who understand the copper sector as well as my guest today. He's an entrepreneur building a company in Colombia who's already put a mine into production. He was instrumental in building the Mirador project in Ecuador, their first large-scale mine, and today a copper mine that contributes 2% of Ecuador's entire country GDP. And he's trying to do it again today in southern Colombia, built an amazing team around him and financed by the likes of Frank Giustra, one of the most successful investors and entrepreneurs in the mining business, is Ian's largest shareholder. Today, we get into not just the supply and demand fundamentals, but Ian understands the extraction business better than anybody I've spoken to in the copper sector. And I love catching up with him because we pull apart the implications of the tariffs, of trade policies, import taxes, all of this stuff, and the new regional copper trading blocks that are emerging. So tons to unpack in this interview. Always a pleasure catching up with Ian on the Jay Martin Show. Enjoy.
This is Jay Martin.
All right, here I am with Ian Harris, Copper Giant Resources. Ian, it's great to see you again, man.
You too, Jay. It's always a pleasure to talk to you.
Okay, so I'm super interested. I wish I could be a fly on the wall in your boardrooms right now because your team, your largest shareholder is Frank Giustra, one of the most successful mining investors and entrepreneurs in the business. You're one of the few copper entrepreneurs who's actually built a copper mine, the Mirador in Ecuador, their first large scale mine, subsequently sold for nearly 700 million. Ernie Mast on your team, former CEO of Cobre Panama. Your team is uncommonly credentialed, and given the volatility of news flow in the copper sector right now, what are the conversations that you guys are having in the boardroom and in the office?
You know, Jed, the funniest part is a lot of those conversations are the same conversations. It's just more like, I told you so. Right.
Okay.
There was a belief and a little bit of longer term vision, right? We saw there's not a lot of assets out there. They're way undervalued. And there's not a lot of experience actually getting the job done, right? And so we knew we would take our kicks. We knew that the market was improperly valuating copper assets and copper companies or in the junior space, in the development space, right? And I love it when people come to me all the time and say, you know what you need to do if you really want to build a mine? Right? I get it all the time. Because I see the average investor is evaluating incorrectly projects, right? Because we need copper. We need good assets. We need assets that can be built, and navigating the political landscape also in order to make sure that they get produced. And there's a reason so few have been built over the last 10 years, I think 6, right? And guess what? They're not in Argentina. They're not in Canada. They're not in the United States. They're not in all these safe jurisdictions that we've already always been talking about, right? So it's about being able to navigate and getting these big projects, right? Mirador is 2% of the GDP of Ecuador, and it's still expanding. It's Cobre Panama, I think, was 5% before it got shut down, right? And maybe I don't even go down that lane, but these are big deals. These are move the economies of countries, right? So they're big ships that you have to navigate. So you're thinking many years in advance. But we understood those fundamentals. We understood that the overall market was being driven by short-term focus, and so it's a little bit of it is I told you so, right? Frank Giustra is ridiculously famous for his timing, right? He got into the last precious metal bull. He got out just in time. He made some, movie producing companies, et cetera. And then he came back. And the difference was he got into copper, right? He knew he saw that what was coming in copper. And he even said, I'm not worried. Yeah, the price is a little low right now, but that's okay. It's going to come, right? We're going to keep backing this thing. And I feel like, we're coming up to that moment where that it's all coming together.
So it's validation, right? That's the chatter in the office right now. That must feel nice. So, we were jamming a little bit about this before I hit record, but here's something that I think about. Let me know what you think about this. So 4 years ago, there was general consensus between most people I had on my podcast that the era of globalization was over. We all kind of agreed on that. And despite that, today people are shocked by import taxes, by export restrictions, by regional conflicts breaking out, which to me are like, well, that's just the symptoms of the thing that we all agreed was happening 4 years ago, right? This is just, it's manifesting now. And that's how that occurs to me. Obviously, copper tariffs have been one of the major headlines in our business, natural resources in general, not just in the copper sector. How do you read into that? And here's what's really important. How do you cut the noise from the substance, right? Because these announcements come and go. Sometimes they last a day, right? What's important to know about the Americans' copper policy?
Yeah, and I think we're going to guess and see that it's not going to be just the U.S. copper policy, right?
Okay.
And I think that very interesting is you see what's coming out of India, which is a little different, which is incentivizing, which I think the United States probably should be more looking at, but they're incentivizing the construction of smelting capacity in India because they're freaking out, right? And I just want to put some numbers. Copper usage growth in India is growing 11% per year. And I think it's 0.25 kilograms per person. And the world average is like 3 or 2.5 kilograms. But they need to grow their copper consumption about 10x, just to get to where the world average is. And that's like 3 million tons of copper, right? The overall 92% of copper to date today is still being used for the electrification and the modernization of the planet, right? So forget the fluff of just its energy transition or all these other things. It's still about just energizing the planet as the biggest push, even though, electric vehicles, et cetera. But that's not going to move copper, right? I think AI could move copper because, and we've talked about this, I think, previously in our other conversations, it will move copper because it is accelerator to the pedal is to the metal, right? It is full steam ahead because it's a race. Like, you've got to win this race. And so the demand is through the roof, right? But when you think about I knew it would happen. Like, tariffs came out and it was, oh my goodness, what's that going on? Like, there was a panic. And back in, when was the Liberation Day? It was a panic hit market, right? But then all of a sudden, the smarter people are starting to figure it out, right? And I would argue, and I'm going to put it in conversation, public conversation right now, that the number one winner of a tariff fight and an anti-globalization, what do you call that? Deglobalization, right? Or assets. And I can explain to you, go into that. The play is assets. And they don't even have to be in the United States. The smelter better be in the United States if you have tariffs on refined copper, because smelters produce refined copper, right? But if you build a smelter, you better have the source of where is the copper coming from? Where is the mine it's coming from? And that is what makes the assets. So the whole point of globalization is to make production chains more efficient. So if you have deglobalization, it will make production chains less efficient, right? So if it's less efficient, you need more supply in order to make sure it works, right? And that only increases the value of the assets, right? So it is creating a unbelievable a secular bull for copper. In the equities, in the exploration equities, in the producing in the equity space, which we haven't seen. So yes, there is a lot of excitement because, well, the opposite side of that is we think that we're sitting on one of the very few assets that are really amazing, right? So we had the thesis and we knew you got to get big, you got to get quality, something that could be built. Because they're going to be so valuable as we move into, and people start figuring out what this all means when we start globalizing the planet.
Yeah. Okay. So I want to pull on a couple threads there, and then we'll get into Mocoa because I want to get caught up on your project in Southern Colombia as well. But the India situation, you touched on that. So they're incentivizing, you talked about their smelter needs and how they're incentivizing the industry. So at a high level, they're offering to finance copper production. Could you walk me through the mechanics of this? Because it struck me as almost a Belt and Road type initiative, right?
It seems very... Well, it shockingly sounds just like what China did, but China just basically bought the assets, right? That's what they did, right? And I was bought by 2 Chinese SOEs in Ecuador, and I remember them saying it, like, We woke up one morning and realized only 25% of our concentrate we actually control, and copper is getting bigger. The world was electrifying. This was 10 years ago. 10 years ago. So it's not like it should be a shock to us, right? They said, and so we said, we need to secure more of our supply to not dominate a production chain. And you might miss it if you're in North America, and definitely miss it in the United States. And every time I visit, it's like, come to South America and go to Europe and see how many BYDs you see, how many BYD cars you see. And you're all of a sudden, and I saw an interview by the guy in charge of Ford. I don't know if it was the guy in charge of their tech or the electric vehicles. And he goes, I go 4 times a year and I'm scared. Like, they have more options. They're through the roof. They're doing great. They're low priced because they thought about this. So as this battle starts to unroll, right, and production chains become again important, it is so bullish for the assets. It is so bullish because they're coveted, right? You need them. Otherwise, you're in big trouble. You're right. There is no electric because we always said it. If you want electric vehicles, you're going to need more copper. It means more people want copper. But the difference is if you are building a vehicle, you now have to figure out where's your copper coming from.
Do you think, and when it comes to just manufacturing in general, I feel like we're about to see a new picture moving forward because of just the increasing percent of manufacturing that's automated, right? China imported like 52% of global robotic equipment last year, and they're, obviously the manufacturing powerhouse of the world. But as you increase autonomous manufacturing, there's like a pie chart of inputs required to make anything. And there's the materials, there's the labor, and there's the energy. And as we automate more and more of the manufacturing process, that slice for labor gets smaller and smaller and smaller, and it's increased by the energy slice, right? And it becomes a larger input to making anything the more we automate our processes. Do you agree?
But I would always agree that's always been true.
Fair.
The problem is globalization made us blind to it. And it also made us blind as consumers and investors, right? So I would say that it has made the overall equities markets very inefficient, because what you're saying is so true. It's so true at the end of the day. But there was a couple parts of that pie chart. If you were manufacturing whatever product that you're like, man, energy is really important to us. What can we do to make it a little bit lower? Our consumption, we can't really do anything. They're commodities, right? And now it's like, no, oh, wait a second. It's not just how much does my energy cost? It's where I'm going to get it, right? When you see Microsoft restarting 4 Mile Island reactors, right, and a nuclear power plant, it's telling you how serious this is getting. This is a big, big, big deal. So I think it's more bringing the optics back and also valuing it. I had somebody tell me recently that Copper Giant was like Revenge of the Nerds, right? Because it's back to the technical know-how, knowledge, back to the assets, back to the where's the value really created from. Right. Instead of something, like buying pixie dust, it's coming back to the value is coming back to the underlying assets and what it creates. Right. Like you just said, what is that pie chart? What is it contributing to and what is that value that it's actually creating? And I think that's all coming back.
Okay. So I want to get into your projects. You're trying to do it again effectively right now, this time in Colombia, this time with a project called Mocoa in southern Colombia. You could say Colombia is in like the American sphere of influence. If you were to draw sort of like spherical borders in whatever the new regional trade blocks might shake out to be. South America probably lands in the American camp to a large degree. You mentioned you got to get big, you got to get quality. You just shared that with me. So obviously lessons learned from being on the ground. Walk me through what people should know about Mocoa. Last I saw you was in Boca Raton at Rick Rule's conference, and you just went live on a financing. And so you've put some cash in the treasury. Catch me up, Ian. Mocoa, what's new with Copper Giant?
So let's start with what you ended with is, we put out a financing of $5 million. We upsized to $7.5 million. It went into $8 million, right? And so that felt really good. And by the way, it was mostly institutional despite our overall valuation, which also felt really good. So we're fully financed to finish this current drilling program that we have. We have 2 drills on site. Having 2 drills is so important because it allows us to, one is infilling, focusing on resource, while the other one is taking bigger, knowledge-based drill holes, right? To look for the next, where's the big expansion coming from, right? So I called it, and up to recently I was calling it, the world wants projects of merit, right? And it comes from, direct conversations with the big copper guys, right? And they go, we want 2 billion tons at 0.5%. And 0.5% of, and they're like, and it could be copper equivalent, but real copper equivalent. That's the other one. They go like, you can't be like throwing in 0.0256% of some weird metal and trying to add it to your actual,
Sure.
Like it has to be realistic that you're actually going to produce it and get paid for it. Right. And that's what they want. That's 10 million. And they're like, don't worry, Ian. I know that freaks you out. I know it panics you. But just as long as we can see how you're going to get there, right? As long as that's the upside. And it's something even me and you have talked about, I think, in the previous, like, you want a project, and they're selling the same things. They're scared, but they're scared of developing a 2 billion ton project. They want a project that they can start at 30,000 tons per day, which is about 200 million tons of reserve and resource that can be produced, but scalability to get to that huge size, right? Otherwise, it's a waste of time, right? It's just too much effort, right? Through this consolidation, it's only made the problem worse, right? It takes a really big project to move your balance sheet nowadays, right? But in a time where I say it, you want a unicorn in a suit. You don't want a unicorn. You want one that's wearing a suit, maybe even a James Bond tuxedo, right? Like this is really hard to find. And they're like, oh, and it can come to production quickly and it's near surface, right? And that's the other big one we're seeing is that a lot of these new discoveries, they're really, really deep underground. So, but we always knew about the quality of Mocoa. And I think part of the overhang has been Colombia. But that's the other exciting thing that we've seen it. We've seen the majors starting to come in. We know that elections are coming up in May. We know that this president can't run again. And by the way, we're already moving forward. We already built this to, getting those relationships and the community on side of the project that will carry it forward. So, this is a little bit of our forte. We know it worked in Ecuador. We know it worked in Panama, and we're already thinking, what are our next steps to actually build this build it as a future mine? So I think sorry, I guess I skipped over something that's more evident, is that most people know Mocoa because we inherited a resource. We had to do a resource calculation, not in my times, but before I got there, because it was an acquisition. So a resource calculation was done, but it doesn't represent the deposit. It's open in all directions. So we did an exploration target just in the nearby around the projects to demonstrate. And guess what? It's 1.9 billion tons. It's 0.5% copper. And it shows that how we can get to that 10 million tons of copper. And to put it in perspective, what is 10 million tons? 10 million tons of contained copper, right? The world right now is producing about 20 to 22 million tons. So it can move the needle. They're looking for something that can truly move the needle. And so that's why we're also excited, because we believed in this asset. It's now moving forward. And again, I use the term revenge of the nerds because it is continuing to attract some of the best talent on the planet, some experts that are involved. I think we have even more news coming out soon that people are getting behind this because they're seeing it. Like they're understanding that this is really something special.
Yeah, an inherited asset. It was B2s before, correct?
That is correct. That's correct. Thank goodness they didn't find any gold. Right? They found a hole. And here's another, I don't say it a lot, but it's like the third largest moly project in the world that I've ever seen. It's really, really high moly grade. Moly is becoming more interesting because it's used in high temperature steels, which are in like wind turbines and et cetera. The prices continue to grow over time. It's quite an opaque market, but it is a significant moly asset. And I say, well, Kate, what a shame you don't have any gold. I was like, our moly grade is the same as the highest grade gold. If you put it as gold equivalent, the highest grade copper gold, big copper gold guys out there. It really carries the project in many ways.
Yeah, that's interesting. And you mentioned this sort of alloy utility of moly, right? Molybdenum, right? And we focused on this a lot when the steel tariffs were announced, right? That we're going to reshore American steel and bring manufacturing back to Pittsburgh and all of this stuff, which sounds great. But the alloys are actually really hard to get. That's the challenge, right? You can't just create alloys. Steel isn't steel on its own, right? Depending on the use case, if you want it to withstand high or low temperatures, high pressure, any weapons, technologies, anything that's going to be outdoor 4 seasons, it's not. And the alloys are generally processed in China and highly concentrated there, right? Very tough to get your hands on. Okay.
Yeah. And it comes back to our original part of the conversation, right? In the deglobalization, in an environment of tariffs, in an environment where you want to strengthen manufacturing domestically, it starts with the smelting and refining capacity.
Right.
And because it's not just, when everybody's going to be doing the same thing. Like you can't be the guy left out in the wind, right? You can't, you're not the one so everybody's going to be doing it at the same time, right? The huge winner in that entire game are the assets, the underlying assets, because they are the start. They are what needs to be secured. Jay, you are not building a copper smelter unless you know where you're getting your copper concentrator. You are not building a steel without understanding where you're getting your iron and where you're getting all your how to make all the alloys, right? Especially in an environment where there's a fight over it, right? And that is where, if you want, where should you put your money in that kind of fight? In the underlying assets, because they're the ones that are going to be invaluable as people are waiting to secure. Where in the past, offtake agreements were with royalty companies or streamers or from the big guys or whoever, right? You're going to see that trickling into, you're going to see vertical integration of the production chains. It's something I've been saying, and it's kind of cool to see it actually, it's playing out in front of us right now, and it makes the underlying assets go through the roof. And we shouldn't be shocked, right? It's a secular business. It's a cyclical business, right? This is why it works out like this, because we forget and then we have to come back again. And that is, there's so many people out there. It feels like this is the start, not of a bull, of a secular bull, right? Which means that it's coming back to the assets, right? Hard assets are now becoming important again.
Do you think that mindset, regions needing to become a lot more strategic with their supply agreements, because countries aren't going to be willing to share as openly as they used to? My entire life, if you had the cash or the credit, you could buy whatever you wanted from the open market. That was it, right? That was efficiency, as you mentioned. And that era is over. And what happens next is a little bit less clear, but it's happening right in front of us. What could you say about the sort of decoupling of price between the COMEX and the LME in response to those, I believe, in response to those tariffs? And what should people understand about that, Ian?
I tell a lot of people, I was like, thank goodness when you put in copper price or gold price, well, more copper price, right? But when you put copper price into your stock app in Apple, it's actually the COMEX copper price, because people see $570 per pound and like copper's going through the roof, because unfortunately markets are more emotional, but thank goodness that's the emotion that it's driving, right? But if you look at the LME price, there's a disconnect. So yes, without a doubt, what we're seeing between the COMEX and the LME is people are anticipating these tariffs are going to come into place, and therefore it's refined copper. Don't forget this: refined copper is more valuable in the United States. Right now, if I could pull aside Trump or his highest level guys, I would love to tell them, but I think that they understand. I hope they understand. Right? If you put a tariff on refined copper, right? If you put a 50% tariff on refined copper, you better put a 75% tariff on the motors, and you better put a 100% tariff on the cars, right? Otherwise, you're just motivating other people to construct the motor in another country.
Right. No, that's really important to know. Absolutely.
But I think they get that. Like, they're not that dumb, right? But just it's refined copper, which means it should be incentivizing the smelting and refining capacity in the United States, which feeds a manufacturing economy, which is what Trump wants to do, right? Which means you still have to source the concentrate. But yeah, I think that that is why we're seeing this. But what's also interesting, if you have to understand that if I'm a mine, right, in most cases, right, I don't sell copper. I sell a copper concentrate, right? And the crazy thing that's going on already is that where in the past I would go, Jay, you have a smelter. So Jay, how much are you going to charge me to process my copper, right? And you're going to, okay, and I'm going to, the treatment charge, right, is $100 a ton. And I'll pay you 99% of the copper. And if you have over a gram gold, I'll pay for the gold, and like all these other little calculations. You've had too much this, too much that, the spindles, et cetera, et cetera. But I'm paying you to refine my copper, and then I get paid on how much copper is contained, right? Right now, smelters are literally paying for the concentrate, right? They're paying. So that's an invisible part of the pricing that you're already seeing, and it only adds to my argument, right? The underlying asset has an extreme value. So you might not see it in the $5, $5.50 price that you see for copper, but I'm getting a bonus for my concentrate, right? I'm getting paid for better than ever. So the underlying economics for a future mine is better than ever, right? Even not just because of the commodity price, because the terms for offtake are better than ever.
So just to make sure I understood that, the tariffs, because I felt like the details were conspicuously absent, which is normal for these announcements, but it's strictly refined product, right? And the strategy there is that we can import the concentrate business as usual, but we just want the smelters to be operating inside the borders, right? That's the strategy, right? It's like, let's get our smelting capacity firing, improving, increasing. Yeah.
Well, we have to assume that our politicians are really intelligent, which is might be a jump, but I think they are. I think there's some really smart people behind the scenes, and even at Rick Rules, we saw that, right? That they have some really smart people providing the policy. That the number one motivation is to strengthen manufacturing, right?
Yeah.
And to really claw back a little bit of what China has been able to produce on the manufacturing front. So if you want to stimulate manufacturing, you have to control. And the other one is they're noticing that China has there was always an assumption, and I remember hearing it and remember talking to it. You're giving all this power to China, like, hey, don't worry, because they're selling it to us. Mm-hmm. They're selling it to us, so they're not gonna, and it's all good that they own $2 trillion of our T-bills, that we're giving them our production chains, all the smelting and refining is over there, because at the end of the day, they're selling to us. But guess what? China is now converting to a consumer economy. They don't need us, right? So they're like, haha, fools you want to make my life difficult? I can make your life more difficult, where the opposite was always felt was be true, right? So there's that is going on. So yes, while I also believe that, stimulating a little bit of more mining activity in the United States, it's limited because Mother Nature tells you where the deposits are, right? And we need more than that. The bigger one is to secure the refined copper capacity, because that is where that's the start of the production chain. And something you mentioned from the beginning, and I'd like to say again, Colombia is a non-major NATO ally of the United States. It is on the same level of Japan or Australia, right? So the only higher level is a NATO member. It is the highest level of ally of the United States. And so, yes, that counts for a lot when you're trying to figure out, we might have a little bit of a sideways run, but Colombia is a strong U.S. ally. It's the longest lasting democracy in South America, never seen a coup. And for its entire life, except for this current president, it's always been a right or center right president. And I would assume that it's going to go back that way based on current popularities. So yes, I think that things are going extremely well, and it's the reason why we see Freeport-McMoRan, we see Rio Tinto, and we see other big mining companies showing up in Colombia right now because the writing's on the wall, right? Market has a tendency to react late, and that I see that the long-term players are already, you see them moving, right?
The longest standing democracy in South America. I didn't know that.
That is correct. Never seen a coup. And it's great because I've seen it come through. Unfortunately, I was in the election of Hugo Chavez. I was in the election of Evo Morales. I was in the countries,
Yeah,
like I was working,
you were, yeah.
and of Rafael Correa, and now of Petro in Colombia, right? So I've seen this happen. And what was amazing in Colombia was the strength of the institutions. The institutions in Colombia are extremely strong, and that really provides that stability, right? More than who is in power from day to day, it's the institutions that provide strength.
Let me ask you another question on the China moving to become a consumption economy, because I feel like in real time here, we're going to see the stress test of the Belt and Road Initiative, right? And yes, the Chinese are becoming a more consumption-based economy, but the strategy with the BRI was post 2008, their main customers, America and Europe, were suddenly on economic life support and weren't buying Chinese goods in the volume they were in 2006 and before. And by financing key infrastructure in undeveloped nations, they were probably trying to nurture the next generation of consumers of Chinese goods, right? And if BYD is maybe the first stress test, it points the direction that's kind of heading, right? BYD, as you mentioned, massively outnumbers Tesla on every continent except North America, right? But you go to Africa, Europe, South America, Asia, it's BYD everywhere. And including like increasingly everywhere. Eating Tesla's market share in China. I think Tesla's down to like 3% of EVs in China, whereas BYD is like, I don't know, is it 60%? Like it's a lot, right? And growing.
It's huge.
And it's a pickle. Interesting. Okay, I need to get a couple more. I want to talk about Mocoa just a little bit more in the context of what can people expect news flow in for the next few months. The Treasury just got topped up. You've got 2 drills right now, allowing you to both infill and step out, learn more. From a news flow standpoint, what can prospective shareholders look forward to?
Yeah, so that's the other advantage. While we do pretty deep holes and we're using these man-portable drills, makes us at least it makes our efficiency like 80+% of our money goes directly into the ground, which is nice. And that's based on experience and people get afraid when they see the number of bodies until they realize, I can pay for 1 week of your helicopter. I'm paying for months of people to be able to move these things around.
Because you can drive right to site, right?
That's right. We can drive to site, but then it's really, people are moving the drills physically and taking supplies up and down the hill, but we don't need a helicopter, right? And so our costs are quite efficient in drilling. I won't say who, but somebody like my direct drilling costs are $600 a meter in South America, by the way. And I'm like, my total corporation is 500, right? Like, the entire company, it's less than 500. My direct drilling costs are like $200, $250, $300. So it makes it very efficient. But from a news flow perspective, we are going to be putting out 1 or 2 drill holes a month, right? Depending how deep we are. We can do about 2 1,000 meter holes per month, and we're not going to be always doing those deep of holes. So we should see some additional efficiency moving forward as we continue to focus. And really the exciting part is we're really heavily focused on, we want to do an updated resource at the end of the year based on this drilling. We now have the money to do it. We've secured it. We can now move forward, get this drilling done for the rest of the year to do an updated resource at the end of the year. And as a minimum, targeting getting over that billion ton mark in total resource. I'm hoping to get a little bit bigger than that because I'd like to have 1 billion mineable. And we are moving fast, and we'll be doing the engineering, et cetera, to start developing a project. Because I want to be able to present a conceptual concept to the next president coming in, right? It's a part of the overall strategy.
Yeah,
right? So
got it.
we are drilling as quickly as we can to increase the resource, get it to the meat and bone size where you have a sustainable project, and then be able to move right into PEA. And if I didn't have elections, I might wait a little bit more. But because we have elections, I want to make sure that I have something supported that it's not dream. It's real. It's something cool. There's something conceptual that I can present, because I believe the next president's going to come in. He's going to go, we need to demonstrate investment. We need to demonstrate job creation. We need to demonstrate how we're going to impulse the economy. I mean, to put it in perspective, like, Cobre Panama was 4 or 5% of the GDP of Panama. Mirador today, and it's still growing, is 2% of the economy, right? These are big projects and they move economies. And so we want to make sure that we're part of that window. So that's a part of the background strategy going on. So lots of news flow. We're in the space where we're now well funded. We'll have more of a systematic, might stay a little bit quiet while it's summertime and not everybody is paying attention. But there's a lot moving, and there's a bigger picture here. We believe that we are trading for 0.2 cents per pound on the ground, and the closest guys next to us is at least a penny. So we see a large revaluation going to be happening as market gets a little bit of momentum in it. And I like to say it all the time. I'm a project builder. Ernie Mass is a project builder. We're attracting more project builder type people, but Frank Giustra is a mining company builder, right? So he has a bigger vision here, and I feel like we'll start building, growing over time. We still want to get our valuation up and be able to do this on more than one asset.
Yeah, I love that. And I love the context in relation to the election, which is less than a year away. That makes a ton of sense. It's time to sprint. I agree. I believe Copper Giant is very undervalued. We're actually going to pick this deal apart as part of our Commodity University Masterminds. We have a online school for resource investors, and we dissect deals together, right? So I wouldn't do that if I didn't have confidence it was going to make me look smart in the future. But look, I mean, when I say undervalued, it's relative to what, right? First and foremost, I'd say relative to the team, because that's my first criteria that I assess, right? And stress test is who are we betting on? Because that's, I'm in the people business, right? If I was a geo, I'd look at things in a different order. But because I'm in the people business, I start with the folks. And it's as I mentioned, it's an uncommonly credentialed team at Copper Giant. Look, always great catching up with you. I feel like we could jam on the copper market for as much time as we had. So always great having you on, Ian. Look forward to the next time. Thanks so much for making the time today.
Excellent. Thanks, Jay. And I can't wait till I bump into you again.
Yeah, man. All right.